If you're a buyer in today's market, you're probably trying to time the market to get the lowest price possible so that there's no regret or that you feel you overpaid. But as interest rates get higher, your monthly carrying cost is getting higher as well. In this video, we're going to take a look at the 4 most popular asset classes, their average price month over month, and we'll see if the prices have bottomed out and if you missed your chance to get a good deal. Stick around. Welcome back and thanks for tuning in. My name is Andrei with the Medow Group and we service Ottawa and surrounding areas, all things real estate. If you're new to the channel, please consider subscribing and hitting that bell notification for upcoming content. And if after this video you might have a question and you would like to chat directly with me, there's a link in the description below. We're going to take a look at 4 asset classes, including detached homes, semi-detached, townhomes, and condos. We'll break down each month and see where the peak market was and where the average price has bottomed out and in which month. We're going to start with detached homes. On the left here, we have our months from January to October. In the middle is the average price. In green is the peak, and in red is the lowest bottom average price. So we started the year off pretty strong. We had an average price of $817,000. It started going up to $909,000. And then in March, our peak month, we hit $917,000 as the average price. Now remember that the average price includes highs and lows, but it's going to give us a good estimation of kind of what to expect and where those homes are. As we hit April, it starts to cool down a little bit, and then pretty much every month since then, so May went down, June it went down, July it went down, August went down, September, and October was actually our lowest price that we've seen for detached homes, and that difference of peak to bottom is about $200,000. And as you can see in our peak month, the number of sales was 1,234, and we are essentially half of that right now at 710 sales. Next up is semi-detached homes, and I find this asset class to be a very interesting type of home. It's kind of that in the middle. If you can't get a detached home, but you want to get a little bit more space than a condo, it's got great square footage. You only have one neighbor to the side. I think this is an asset class that we should watch out for in the future. I think the demand for these type of homes will definitely go up. So we started off with $745,000 as the average price, and it started to grow. In March, we hit our peak, which was $776,000. And then since March, our peak month, we slowly started to go down. So 737 in April, 734 in May, 704 in June. July was 669, August was 667, and September was our bottom, which was 658. And then last month in October, it actually jumped up. And as you can see on the right, so did the number of sales. So again, it's not a lot of sales because it is kind of that asset class that is not super popular compared to townhomes and condos. But as you can see, the number of sales is on the rise. So I think that bang for buck, this could definitely be an option that consumers should take a look at. Now we have row units or townhomes, which is our most popular asset class. We saw a lot of activity this year on it. We started off strong with a $680,000 as the average price in January. Then it grew to 703, and then boom, our peak month was March, which was 726. We had 416 number of transactions. And then since our peak, it started to go down. So 702 in April, 671 in May, 646 in June, 608 in July. And it kept, so what's interesting here is that the 608 in July, it then went up in August, dropped slightly in September, and then took a pretty big hit, about $25,000 on average in 1 month. So our bottom has been in October last month at an average price of $580,000. And again, if you compare peak month, so over here back in March, number of sales or transactions is 416. And in October was 200. So again, half of the sales that we had at our peak month. Last but not least are condos. I talk about condos all the time. There's a lot of future development coming to Ottawa in terms of condos. It's kind of that price point where the average consumer in terms of affordability is at right now. It's also a great asset class to get into the market, to get started with real estate and then kind of move up. So in January, we're trading at $447,000. Our peak, we hit $479. for a total of 531 sales. So lots of transactions with this asset class. And then as our peak month kind of ended, we slowly went down. But again, not by much. This is an interesting asset class that holds its value throughout the whole year, right? So we started at 447, our peak was 479. We went down a little bit, and then we hit our bottom in July. So the beginning of the summer, 419. And then it started to kind of go up. So 421, then we had that big spike in September to 450. And October only saw a slight decrease of $5,000. Transactions are on the rise as well too. If you look from peak 531, yes, the bottom was a lot lower, but you know, if you keep going down to August, September, and October, you have 299, 272, and 244. So definitely an asset class that is on the radar for a lot of consumers. So what does this all mean? Well, for buyers, I'd say that there is definitely some opportunity. If you're looking at a total cost of a property, then detached homes has fallen by $200,000 since the peak month. That means your down payment is that much smaller and your monthly cost could still be okay even with the interest rates rising. But again, this all depends on your situation, how big the down payment is, so speak to your mortgage broker for a full detailed breakdown. Semi-detached homes, I think right now will give you your best bang for buck, as it's a step up from condos and townhomes in terms of square feet and layout. You're only getting one neighbor to one side, so definitely some advantages there. Same goes for townhomes. If your budget is a bit stretched and you're under $600,000 for affordability, then townhomes is something to consider. It's a great entry point into the market for couples and families, and still our most popular asset class. And for condos, if we compare January to October, the price is pretty much the same or has stayed flat this year. The peak never broke $500,000 and the lowest never went below $400,000. Still a great entry point with lots of value. Don't forget that the average income producer right now will be around $400,000 to $500,000 in terms of affordability, so condos is where you'd start to get into the market. Now, we have under 2 months left, one more interest rate announcement, and the question becomes what will happen in the start of 2023 and who are going to be the buyers that step in, because regardless of what happens in the economy and external factors, buyers need to move and we still have transactions happening every month. Do I think that home prices will rapidly increase in a short period of time? Probably not. But because we're still in a seller's market with less than 4 months of inventory, we need to watch the future demand and if they start to put pressure on our current inventory. And those buyers include relocators and future immigration, and there's lots coming. Thanks for watching. Catch you in the next one.